Options trading might sound complicated, but it can be a powerful way to grow your money once you understand the basics. For beginners, options offer flexibility to invest in stocks without owning them directly. You can profit in many market conditions by using options to protect your investments or to speculate on price movements. This guide breaks down options trading in simple terms, helping you learn what options are, how they work, and how to start trading safely. With clear steps and explanations, you'll gain confidence to explore this exciting part of investing. In this video, we will talk about how to trade options as a beginner, simple explanation. So make sure to watch the full video. 1. What are options? Understanding the basics. Options are contracts that give you the right, but not the obligation, to buy or sell an asset at a set price before a certain date. The two main types are calls, the right to buy, and puts, the right to sell. Options differ from stocks because they don't represent ownership in a company, but rather a potential future transaction involving that asset. Learning these basics helps you understand how options can be used to make profits or reduce risks depending on market conditions. Grasping this foundation is key before moving on to more complex strategies, and it sets you up to use options effectively in your investment plan. 2. Calls and puts. What's the difference? Calls and puts serve different purposes in options trading. A call option gives you the right to buy a stock at a certain price within a specific time frame, useful if you expect the stock's price to rise. Conversely, a put option allows you to sell a stock at a set price, which can protect you from losses if the stock price drops. Understanding when and why to use calls versus puts is critical for beginners. This knowledge helps you make informed decisions based on whether you think the market will go up, down, or stay steady, and it also helps you choose the right tool to meet your trading goals. 3. How options are priced. The role of premiums. The price you pay for an option is called the premium. It depends on factors like the stock's current price, strike price, time until expiration, and market volatility. Higher volatility or longer time frames usually mean higher premiums because the chance of profit is greater. Knowing how premiums work helps you decide whether an option is worth buying and how much risk you are taking on. This understanding is crucial for managing your investments wisely. By learning how premiums change, you can better time your purchases and sales to maximize profits or minimize losses. 4. Why trade options? Benefits for beginners. Options offers several advantages, such as leverage, limited risk when buying options, and the ability to profit in rising, falling, or flat markets. They allow smaller investments compared to buying shares outright, giving beginners access to bigger potential gains. Options can also be used to protect your stock investments by acting like insurance. These benefits make options appealing for new traders who want more control and flexibility in their investing strategy. Additionally, options can diversify your portfolio, offering different ways to generate income beyond traditional stock ownership. 5. Common option strategies for beginners. Some simple strategies beginners can start with include buying calls or puts, covered calls, and protective puts. Buying calls or puts is straightforward. You bet on price going up or down. Covered calls involve owning the stock and selling call options to generate income. Protective puts act as insurance by allowing you to sell your stock at a set price if it drops. Learning these strategies gives beginners tools to start trading with less risk and more understanding. As you grow more comfortable, you can explore combinations of these strategies to tailor your trades to specific market conditions and goals. 6. How to read an options chain. An options chain lists all available options for a stock, showing strike prices, premiums, expiration dates, and volume. Reading this table helps you find options that fit your trading goals. You can compare prices, see how many contracts are being traded, and decide which options to buy or sell. Becoming comfortable with options chains is important for planning trades and understanding market sentiment. By regularly reviewing options chains, you'll also start noticing patterns and pricing trends, which can improve your timing and selection of trades. 7. Understanding expiration dates and strike prices. Options have expiration dates, meaning they become worthless if not exercised by then. The strike price is the fixed price at which you can buy or sell the stock. Choosing the right expiration and strike price depends on your market outlook and risk tolerance. Closer expiration dates cost less but offer less time for the stock to move. Strike prices closer to the current stock price tend to be more expensive but have a higher chance of profit. Balancing these factors is key in options trading. Learning how to select the right combination improves your chances of success and helps control risk. 8. Risks involved in trading options. While options can offer big rewards, they also come with risks. Buyers can lose the entire premium if the option expires worthless. Sellers, writers of options, may face unlimited losses if the market moves against them. Options are more complex than stocks and require careful study and planning. For beginners, managing risk through education, starting small and practicing with paper trading can help avoid costly mistakes. Understanding risk also means knowing when to exit trades early or cut losses, which is just as important as making the right initial trade. 9. How to open an options trading account. To trade options, you need a brokerage account approved for options trading. Brokers usually require you to fill out a questionnaire to assess your knowledge and risk tolerance before granting access. It's important to compare fees, educational resources, and trading tools between brokers. Starting with a user-friendly platform can help beginners learn and trade with confidence. Always review broker policies and support before opening an account. Some brokers also offer virtual trading accounts so you can practice without risking real money, which is a great way to build experience. 10. Tips for beginner options traders. Start small and don't risk money you can't afford to lose. Educate yourself continuously through courses, articles, and practice trading without real money. Use simple strategies at first and focus on understanding how market movements affect your options. Keep track of your trades and learn from mistakes. Patience and discipline are key to becoming successful in options trading over time. Additionally, avoid chasing quick profits and stick to your trading plan to develop skills steadily and build confidence. Trading options can open new investment opportunities and add flexibility to your portfolio. However, success depends on understanding key concepts like calls, puts, premiums, and risk management. As a beginner, start slowly with simple strategies and learn how to read options chains and choose expiration dates wisely. Remember that options carry risks, so practice, education, and caution are essential. By following these steps and tips, you can build a strong foundation to trade options confidently and potentially increase your returns in today's markets. Options trading is a skill that grows with experience and knowledge. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.